In our last video, we covered 7 new tax changes for the 2026 filing season. One of those changes, no tax on tips, could save tipped workers thousands of dollars. But to actually get the money, you need to know 3 things: whether your job qualifies, exactly how much you can deduct, and how to claim it without making mistakes that trigger an audit. Let's break it down. This deduction lets you shield up to $25,000 in tip income from federal income tax. A full-time server earning $40,000 in tips could save $3,000 to $4,000 at tax time. That's real money. But here's what most people get wrong. This is a deduction, not an exemption. Your tips still get reported as income. The deduction reduces the amount of that income that gets taxed. 3 things must be true for you to qualify. First, your occupation must be on the Treasury Department's approved list. The IRS published 68 qualifying job titles across 8 categories. Second, the tips must be voluntary. Cash tips, credit card tips, digital payments like Venmo, and shared tip pool money all count. Automatic service charges, like an 18% gratuity added to large parties, do not. And non-cash tips, like event tickets, gift cards, or free meals, don't qualify for the deduction either, even though they're still taxable income. Third, your modified adjusted gross income must be under the phase-out threshold. That's $150,000 for single filers, or $300,000 for joint filers. Above those numbers, the deduction shrinks by $100 for every extra $1,000 you earn. 2 more things to know. You must have a valid Social Security number to claim this deduction. An ITIN does not qualify. And if you're married, you must file jointly. The 68 qualifying occupations fall into 8 categories. Category 1, food and beverage service. This includes servers, bartenders, sommeliers, bussers, barbacks, cooks, hosts, room service attendants, and beer cart attendants. Category 2, hospitality and guest services, bellhops, concierges, hotel desk clerks, and housekeeping staff. Category 3, personal care and appearance. Barbers, hairstylists, nail technicians, massage therapists, and spa attendants. Category 4, home services. House cleaners, landscapers, plumbers, electricians, HVAC technicians, pool cleaners, locksmiths, and window washers. Category 5, transportation and delivery. Taxi drivers, rideshare drivers, valets, shuttle drivers, pizza delivery workers, grocery delivery workers, package delivery workers, and car wash attendants. Category 6, recreation, tour guides, golf caddies, ski instructors, and fishing charter workers. Category 7, entertainment, gambling dealers, DJs, lounge singers, and even digital content creators who receive tips or donations from viewers. Category 8 covers additional personal services, including nannies, tutors, pet caretakers, portrait photographers, tattoo artists, and moving company workers. Now, who does not qualify? If you work in healthcare, performing arts, or athletics, your tips are excluded. The same goes for what the IRS calls specified service trades or businesses. That includes lawyers, accountants, consultants, and financial advisors. If you're on the approved list, here's how to claim it. You'll use the new Schedule 1A attached to your Form 1040 for the 2025 tax year, the return you're filing right now. You'll pull your tip amounts from your W-2, your 1099, or Form 4137 if you have unreported tips. Enter those amounts on Schedule 1A, Part 2. The form calculates your deduction based on the lesser of your actual tips, or the $25,000 cap, then applies the income phase-out. The $25,000 cap is per return, not per person. If you both earn tips and file jointly, you share it. For the 2026 tax year, things get stricter. Your employer's W-2 will include a new box, Box 12, Code TP, that separately reports your qualified tip amount. It will also include a Treasury Tipped Occupation Code, or TTOC, in a new box 14B. If your employer doesn't report the TTOC correctly, you could have trouble claiming the deduction. So this is worth a conversation with your employer before next year. This deduction covers tax years 2025 through 2028. Unless Congress extends it, it expires after that. There's no fee to claim it. Since this is the first year, the IRS waived penalties for employers who didn't separately report tip amounts on W-2s. That means you may need your own records, pay stubs, or a personal tip log to calculate the deduction this filing season. Starting next year, employer penalties kick in for missing W-2 tip reporting. Here are the mistakes that will cost you money or trigger IRS scrutiny. Mistake 1. Thinking no tax on tips means you stop reporting tips. Wrong. You must report every dollar. The deduction only works if your tips appear on the forms we covered. Unreported tips don't just miss the deduction, they trigger penalties for underreporting income. Mistake 2. Forgetting that payroll taxes still apply. This deduction only covers federal income tax. Social Security and Medicare taxes, 7.65%, still apply to every dollar of your tips. State and local income taxes may also still apply depending on where you live. Mistake 3. Assuming you qualify based on your industry, not your specific job title. A restaurant manager who doesn't receive tips is not eligible, even though servers in the same restaurant are. The deduction is based on your occupation, not your workplace. Mistake 4. Not keeping a tip log. Without records, you'll have nothing to show if the IRS asks questions. Keep a daily log or use the IRS tip tracking form, Form 4070A. If you earn tips and your job is on the approved list, this deduction could save you thousands. Start by confirming your occupation qualifies, gather your tip records, and file Schedule 1A with your return. Our free guide has the complete list of 68 qualifying occupations, a step-by-step Schedule 1A walkthrough, a printable tip tracking log, plus special rules for self-employed filers and gig workers that we couldn't fit in this video. Download it using the link in the description. Up next in this series, we're breaking down the no tax on overtime deduction. If you're an hourly worker earning time and a half, that one's for you. Subscribe so you don't miss it.
Thank you for watching GovClarity. Remember, you can find our complete guide and all official links in the More section. If you found this helpful, please like, subscribe, and share it with others who might benefit. Remember to hit the notification bell so you never miss our latest videos. We're here to make government procedures easier for you every step of the way.